Welcome to a new deep dive. Today, we're cutting through the noise on Palantir's latest earnings call, Q2 2025. Our goal here is simple. Give you the fast track, the really clear picture of their performance, strategy, and what it all might signal for the market. Got some big numbers, some pretty bold guidance, and interesting stuff from the leadership team to unpack.
Absolutely. And look, it's more than just the numbers themselves, right? It's about seeing AI's impact accelerating, really taking hold in enterprise and government. We'll try and connect those dots for you, the results, their specific tech approach, and what that means for customers and, well, the competition.
Okay, let's jump right in then. The headline numbers from the call yesterday, August 4th, after the bell. Clearly a quarter with some real power behind it.
Yeah, definitely strong momentum. So GAAP EPS came in at sort of $1.13. Non-GAAP, it's sort of $1.16. Just quickly, GAAP is the standard accounting view. Non-GAAP often pulls out things like stock compensation, maybe gets a clear operational profit picture. Both matter, different lenses, and crucially, both beat expectations. Revenue hit $1.004 billion. That's a billion with a B.
A big milestone.
Huge. And it was a 7% beat versus consensus, up a pretty staggering 48% year over year.
And that growth, it wasn't just flat across the board, was it? That kind of tells its own story.
Exactly. The U.S. commercial side surged 93% year over year. That landed at $306 million. U.S. government also strong, up 53% year over year to $426 million.
Yeah.
So put together, overall, U.S. business grew 68% year over year. And now that makes up, 73% of their total revenue? Big concentration there.
Wow. Okay. Those are serious top line numbers. But what about underneath? Profitability, cash flow, the engine room, really?
Right, equally important. GAAP operating margin hit 27%. The adjusted figure, even higher at 46%. Impressive. And free cash flow. FCF, basically the cash left over after running the business and reinvesting, stood strong at $569 million. That represents a 57% margin, which is very healthy. And all this pushed their Rule of 40 score to 94%.
94, that's huge.
It's astonishing, frankly. You combine revenue growth and profit margin, 40% is considered excellent for software. They're at 94. And it was up 11 points just from the last quarter. 8th quarter in a row, that score's gone up.
Yeah, you definitely saw that reflected in the market reaction, right? The stock popped in after hours, and the next morning you could feel the enthusiasm. Okay, so powerful headlines, but numbers only get you so far. What's really driving this? The strategy, the core ideas, what are they saying?
Well, the CEO, Alex Karp, he didn't mince words. He said, our Rule of 40 score hit 94%. AI leverage is astonishing. But then he made this really bold claim. He's going to be saying that large language models, LLMs, they simply don't work in the real world without Palantir.
Okay, that's a statement. I mean, is that just CEO bravado? Or is there a real technical point there about their ontology thing? What is that?
It's a fair question. Look, think of LLMs as these brilliant language machines.
Right.
Right. They understand and generate text incredibly well. But they don't automatically understand your specific business, your parts, your customers, your supply chain, how everything connects. Palantir's ontology, that's like the detailed map, the knowledge graph for your specific world. It structures all that messy data. So when the LLM uses that map, it's not just talking about things, it's operating within the reality of the business data.
Ah, okay. So the ontology provides the context, the grounding to make the AI's output actually actionable, not just generic text.
Precisely. That's what they mean by AI production impact.
Right.
Real results, not just neat demos. And that's translating into the numbers.
Right. So how's that playing out in the commercial space specifically?
It's definitely fueling what they call their commercial flywheel. Obviously, hitting that billion-dollar quarter for the first time is huge. But also total contract value, TCV, new deal signed, hit a record $2.27 billion. That's up 140% year over year. And within that, 157 deals were worth $1 million or more. So big, significant customer commitments.
And then on the government side, you mentioned that earlier, but there was that one really massive deal.
Oh, yeah, the Titan Award. U.S. Army. $10 billion over 10 years. It basically rolls up like 75 different contracts into one giant enterprise deal.
So it makes them kind of foundational for Army AI.
Pretty much.
Yeah.
De facto operating system, like they said. And in defense, once you're that embedded, well, switching costs are enormous. You've got funding visibility for years. Plus, they got another $795 million ceiling increase on their Maven contract. So deepening those government roots.
Okay, so government deepening, U.S. commercial scaling. What about the third piece, their AI platform, AIP? How's that actually rolling out?
That's accelerating too. AIT deployments apparently tripled just quarter over quarter. And they're seeing Fortune 100 companies move from just testing it, pilots, to actual paid contracts pretty quickly. They also hinted at something called AIP modules coming soon, maybe at their developer summit in September.
Modules, like pre-built AI tools.
Sort of, yeah. They pre-trained AI agents designed for specific tasks or industries. The idea seems to be making AIP usable beyond just the hardcore data scientists, opening it up to regular business users. That could really expand their market.
Can you give us a sense of what this looks like on the ground, like real examples of customers using this stuff?
Yeah, they shared some pretty compelling ones. Citibank, customer onboarding, KYC checks, used to take like 9 days.
Right, very manual.
Exactly. Now, seconds with AIP. Think about that efficiency. Or Fannie Mae, finding mortgage fraud. It used to be a 2-month investigation. Now again, seconds. Nebraska Medicine. They used it to optimize their discharge lounge. Saw a 2,100% increase in utilization. They said it was like adding a whole new hospital unit.
Wow, without building anything.
Right. And Lear Corporation, the auto supplier, they extended for 5 years. They've got like 11,000 people using Foundry and AIP across 175 different use cases. Their CEO called it a first mover advantage.
Oh.
So it's not just theory, it's frontline workers getting, real leverage from the software.
Okay, looking forward then, what did they guide for Q3 and the full year, given all this momentum?
So for Q3, they're guiding revenue between $1.083 billion and $1.087 billion. That implies 50% year-over-year growth, still very strong. For the full fiscal year 2025, they bumped up the guidance, now expecting between $4.142 billion and $4.150 billion, as about 45% year-over-year growth for the full year. And they specifically raised the guidance for U.S. commercial revenue, now expecting over $1.3 billion, which means at least 85% growth there for the year.
That's a pretty confident outlook, especially at their size now.
It is. And, they also touched on talent, how they attract people. They emphasized offering access to problems that matter. Said being a Palantirian is becoming like a top credential in tech, regardless of your formal education. And they framed AI as giving the American worker superpowers, calling it an agency-enhancing revolution.
Agency-enhancing, meaning it helps people do their jobs better, doesn't just replace them.
Yeah, that's the idea. Empowering human judgment and productivity, not making people redundant. That's the pitch, anyway.
We saw the market like the results. What else does this earnings call tell us about how investors are thinking or, broader industry trends?
Well, that big share price move, combined with really high call option volume, like double the average, it suggests what they call an upside squeeze.
Okay, what's that exactly?
Basically, a lot of options traders might have bet against the stock, maybe selling call options, expecting a smaller move or even a dip. When the results were so strong and the stock jumped, those traders had to scramble to buy shares to cover their bets, which just pushed the price up even more. So it suggests the market was maybe caught a bit flat-footed by just how strong the quarter was.
So expectations were maybe a bit too low going in?
Potentially, yeah. I mean, there was some analyst upgrades before the call. People were talking about AI and defense spending picking up.
Yeah.
The whole backdrop is favorable, right?
Right.
More focus on AI software, bigger defense budgets, prioritizing digital tech like Titan and Maven needs.
It sounds mostly positive, but surely not everyone's completely bullish. Were there any notes of caution from analysts?
Oh, for sure. You had Wedbush calling them the best story in all of software, which is, pretty strong. But others, like UBS and Citi, they kept neutral ratings. Their main hang-up tends to be valuation.
Right. Trading at, 100 times sales or something? That's steep.
It is,
Yeah.
by traditional standards, definitely. But the fact the stock held onto those gains after the earnings, it suggests the market, for now anyway, is buying into the management story. They're betting that the 45% plus growth and the unique AI position justifies that premium multiple.
Okay, so pulling it all together, what's the big picture takeaway from this quarter? What should we be watching now?
I think it really solidifies that 3-part strategy. Keep digging deeper with governments, scale up that U.S. commercial engine, and really start monetizing AIP. Things to watch. Definitely the Army's decision on Titan low-rate production, probably in Q4, that moves it from contract to reality. Any signs of traction with NATO for AIP would be big internationally. And pricing details for AIP probably come at that developer side. Oh, and they're sitting on about $6 billion in cash. Keep an eye out for maybe some smaller tuck-in acquisitions to add capabilities.
All right, let's shift gears. Time for our This Is Not Financial Advice segment. We put on our imaginary hedge fund hats, pitch an outrageous but, plausible trade idea. Given everything we've heard, especially that talk about AIP being this foundational layer, maybe even pulling business away from generic cloud stuff, what's a wild idea?
Okay, here's where it could get interesting, right? Remember that quote about customers replatforming away from the highly unopinionated services onto AIP with its highly opinionated building blocks?
Yeah, unopinionated versus opinionated.
Exactly. It suggests a potential shift in where the value gets captured. So, my outrageous but plausible pitch: go long Palantir and pair it with a short position on one of the big cloud hyperscalers, specifically one seen as mostly providing that generic, unopinionated infrastructure.
Okay, long Palantir, short a hyperscaler. Unpack the thinking on that pair trade.
Okay, so the hyperscalers provide the raw computing power, the storage, the basic building blocks like flour and sugar. You can make anything, but you have to do all the work, have the recipe, be the chef. Palantir's AIP, with its opinionated structure and ontology, is more like a high-end meal kit. The complex parts are prepped, the recipe's clear, you get to the valuable result, the AI application, way faster, like 10x faster, they claim.
Right.
So the thesis is, AIP creates this new AI operating system category. Yes, it uses the hyperscaler's compute, but it captures the high-value enterprise layer because it delivers that specific business impact so much quicker. If companies find that this is where the real AI value lies in operationalizing it with context, then maybe the value shifts. Palantir becomes this super sticky, high-margin software layer, potentially taking some of that value that might otherwise have just gone to the more commoditized general-purpose cloud infrastructure. It's a bet on the opinionated application layer winning out over the unopinionated plumbing.
What a deep dive. So we've hit Palantir's record quarter of the big wins in government and commercial, and that pretty aggressive guidance, all fueled by AI adoption.
Yeah, the key things really are that strategy clicking into place, that incredible Rule of 40 number showing growth and profit, and just the relentless focus on delivering actual AI impact. Look, the valuation debate will continue, sure, but their ability to grow revenue this fast, especially in the U.S., while margins expand and cash flows, it's a compelling story they're telling.
So what does this mean for you, the listener? Well, it probably means keeping a close watch on how companies are really making money from AI. Is it just selling the picks and shovels, the raw compute? Or is it the companies building solutions that turn AI into tangible value, into that agency for workers on the ground?
And that really tees up the big question playing out right now. In this whole AI race, who ultimately captures the lion's share of the value? Is it the infrastructure folks, the LLM creators? Or is it companies like Palantir that are wiring it all together, making it work inside complex organizations? That's the multi-billion-dollar question.
We hope this deep dive gave you some clarity, maybe sparked some new thoughts on a really fascinating company. As always, remember, this is just for information, definitely not financial advice. Please do your own homework. We'd love to hear what stood out to you. What did you find most interesting from this dive into Palantir's quarter?